What are some of the things that can cause a lender not to grant you a loan, okay, when you're in the process of buying a house? But before we talk about that, please do not forget to like, share, comment, and subscribe to my channel. And make sure you turn on your notification bell so every time I upload a new video, you will be the first to be notified, okay? So what are some of the things that can actually cause a lender not to grant you a loan? Let's say you've already gone through the whole process, pre-qualification and approval, and then you actually see this house that you like so much, and now it's time for you to go close, and now it's time for them to actually tell you, oh, this loan is granted, and now they can't give you. What could be some of the reasons why your loan doesn't go through or fall off? So there are several factors that could potentially cause a lender to deny you a loan application for buying a house, even at the final stage of it, right? So the final stage is at the stage where you've already seen this property and now gone into agreement, and then you're going to close, maybe a few days to actually closing, and then your loan falls through. So the number one reason could be your poor credit. Lenders can refuse to actually grant you a loan due to poor credit. No, your credit most of the time is assessed by a lender as your credibility, which is from reviewing your past credit history. So by the time you go through this pre-approval process, your credit was good and nothing was a problem, right? And then out of nowhere, maybe you had a bill that you had ever, maybe you know how we open these store credit cards and we buy, and then maybe you forgot to pay that credit card back, and you never ever remember that you had a credit card like that. And at the end of the day, at that time when you were going through the process, it didn't show up on your credit as bad, okay? And then toward the end of the day, that thing shows up on your credit that you forgot to pay your credit, and they sent your name to maybe this creditor, this I don't know what they call it. These creditors are actually called to ask you for their money, to ask you for money on behalf of the company, correct? So they send your name there, and now that pops up on your credit at the last minute of you getting that loan. It's actually going to affect your loan because your credit score can drop drastically from where it was to I don't know how much. But however, some such things like that could actually cause you to have poor credit almost at the final stage. So if you have high level of debt or records of bankruptcy or foreclosures, equally these things can cause you poor credit and can actually cause a lender to deny granting you that loan. So that was the first reason, right? Poor credit. The second one is insufficient income on employment stability. Most lenders will want to make sure that you actually have an employment history, right? And they will prefer for you to stay under maybe a company for a while, for a long time. You know, sometimes they feel like if you work for a particular company for some long time, of course, there's a guarantee that you're going to stay there for a little while longer, even after they grant you a loan, right? So if you have insufficient income, well, lenders will typically evaluate your income and employment history to determine how you can repay them their loan, okay? And if you're not consistent, if you're inconsistent, or if you have insufficient income, well, they will have to start thinking twice about, if I give this person this money, will they be able to repay me back? Because of course they're taking a risk on you, so they want to make sure that risk they're taking is what it. If it's not worth the risk, if you're not worth the risk, then I'm not sure they want to go through giving you a loan they know you can't pay back. Because of course, if they see your income and see your employment history, they can determine how much. They can know that, hey, this is how much this person is making, and of course they'll be able to pay me back my money whenever they get this loan. So They equally want to make sure you don't have short employment histories, because this might raise doubt on whether or not you are able to pay them back. Okay, so the number three reason why you could not be granted a loan at the final stage of you getting a house could be inadequate down payment. A lot of times people say you can go for this. I mean, we still have this option of zero down payment, okay? But however, your zero down payment depends on what kind of loan you're taking. So if you actually go for a conventional loan, I don't think a zero down payment is going to work for a conventional loan. So make sure you know the kind of loan you're actually going for. But however, let's just say you have inadequate down payment. Lenders often require a down payment because they want to make sure that the homes you're purchasing, you're actually paying a percentage of that to them. Of course, everything is a win-win, right? If you want a loan, you have to actually go by my rules. If I'm giving you money and I'm asking you to pay me 10%, 20% of what that house is, of course you have to come up with it. There's no free meal, correct? So make sure you have enough down payment for whatever loan type you're actually going into. FHA, FHA, conventional loans, they actually require a down payment, right? So if you don't have enough money to put down for this down payment, there could be a potential problem, because of course you do not meet the requirements that they really need from you, and now they say that I'm unable to grant you this loan. So just make sure whichever loan type you end up taking, you should be able to provide a down payment, at least to the bare minimum that is requested from them, okay? That way, the lender is able to give you what you are asking for. So number 4 will be property appraisal issues. Appraisers, remember, will give them the fair market value, okay? So if a lender the lender may conduct an appraisal, right, to determine the value of that property, and that if the property comes and it's way down, or the appraiser comes way down or way below what the seller actually mentioned it for, of course they will only be willing to give you what the appraiser says. They will not give you what the seller wanted, okay? So make sure that if you have your appraiser coming at a significantly lower price than the agreed upon purchase price between the buyer and the seller, you have the money to make up for the remainder of it. So let's just give examples here. If you agreed with the seller to get a $500,000 house and the appraiser came in at $450,000, the lender is only going to give you what the appraiser appraised for. It's not going to give you the remainder of it. So if you're willing to buy that house, then of course you have to come up with the remainder of what is between $450,000 and $500,000, correct? So if you end up not having the money to do it, of course that might not be possible for you to be granted that loan, because you're unable to meet the seller's requirement at this time. And of course, the lender will want to make sure you come up with that money before they can grant you the remainder of the loan, correct? So that could be one of the reasons for the denial of a loan at the final stage of you buying that house. Number 5 is going to be changes in financial circumstances. And this could happen at any time between the beginning and the end of you buying that house, okay? You know, when you actually start the process and you never know, right? And something happens, like you lost your job, or there's a substantial decrease in income. Let's say you're actually self-employed, right? And now you can't bring in the money that you were bringing at the beginning of the day. And unfortunately, maybe they request for more documents from you. Or let's just say, at the end of the day, you still lost your job, but you actually have like a short-term disability. during your short-term disability, you're not making the same amount of income you were making before, right? So if they pull your name up at the final stage and realize that you're actually on short-term disability or leave of absence, of course you're not making the same amount of income you were making. So that might significantly impact how much loan you can get, or can actually affect the loan totally. Maybe you were not able to present documents that after this disability I'll still have to go back to work, or this disability is going to take longer than expected, or all those type of things. So that could be one of the reasons, right? Like a change in your financial circumstance that could lead to you not being given that loan. So some of these things could be controlled, some of them cannot. But however, wherever you find yourself, just make sure you ask if there are alternatives to all these things, okay? If they have alternatives, or if there is any way that anything they can advise you to do for you to help, for it to help you throughout this process, politely ask them, and I'm sure they'll give you alternatives, so they'll tell you what you could do for these loans to be granted to you. So thank you for watching to the end of this video. Remember, my videos are always for educational purposes only. Please make sure you do your own research and ask questions to the right people whenever you're there, okay? So do not forget to like, share, comment, subscribe, and turn on your notification bell, so every time I upload a new video, you'll be the first to know. And if you're interested in learning more about some home buyers guides, of course, I have a book. I'm going to be leaving the link in my description box. So just click and request for a copy, and you will be good to go. Until next time, stay safe and healthy.